So welcome all to webinar number 8 in this series. But if we add the COVID-19 and the previous market development webinars, we are close to 10 in 3 months now. Hope you find the information useful in this uncertain environment. So continuing with our journey of UK FM market development, today we'll be looking at hard FM in building services detail. So where are we? At the moment, this is the brilliant thing in the past 1 month, what's been happening. The COVID crisis has clearly highlighted the importance of FM facility services at last. As you can see, we had the World FM Day, 13th of May. And now when Britain is getting ready, or the offices have been opened, some are from Wednesday as well, we are seeing that in preparation for offices and all the other infrastructure to be gradually moving back to normal, it's important for our cleaning, catering, security, asset maintenance companies available in advance or in tandem to support the country and the economy and our own clients to return to work. And that's important. And I'm glad we are here working as partners with our clients who are supporting their clients. And together we are here in this journey to bring Britain back again. So good news is we are now ideally poised to take a lead in UK's return to new normal. But how many people are leveraging it to bring it back is going to be interesting. How fast you're going to move, what sort of solutions you're going to bring, because now there is not much structure, not much compliance with direct awards and public, private, and with lots of projects that's floating around on how help me to come back to normality, or at least to the new normal. It's there up. But here what we have done is we are giving you market development based on the data. What are the projects that's already been outsourced, and collecting the intelligence on what's happening in the market as and when it's available, and sharing it with you so that from our side, we're enabling you to build up your market strategy. So where are we? We are pretty much close to finishing up the market analysis series. It finishes next week. So we are here, 15th of May, UK building maintenance, hard FM services. That's it. So our COVID-19 update went up yesterday with the update on how to get ready for Britain. There are 3 more new intelligence articles will be published over the weekend. Please do have a look and gain insights and position your company, make it dynamic. That's all we want you to do. So let's crack on with it. And if you have missed any previous webinars, please go in, have a look on demand. It's there. So regardless of what FM company you are, this is where we are. Right? There are 4 things that's heating up. In addition to as FM as a service provider to maintaining assets, these are the immediate service offerings or opportunities for FM companies. It comes in various format. Number 1, can you please provide confidence building? Can you please provide confidence that if a building is safe so that we can come back to work? Number 2, can you provide safety, health and safety and wellness within the building? And number 3, we have to change the workplace design. We have to change the protocols, procedures. What support can you give, not just on workplace design, but on the overall running of a company operations, operational resilience? And finally, we enter the building, and if things do happen, things do go on the other way, how can you future-proof a building? So if you haven't got the solutions for that, this is the right time to build a solution, go back to your clients and help them to come back into their own new normal. So some are doing other things. I've just noticed in this past 1 week, many proactive companies have come back with their own reports, and many haven't published reports, but they're quietly supporting their clients. So all good things are happening there. But very soon, do more, but I just thought I'll highlight it just so that your current clients might know, but your prospective clients might need to know that you can also deliver the services that your current clients are offering. But if you can come out with these few things, like how can you provide comprehensive assessment, some sort of checklist of facilities, so either they can do themselves or you could do it quickly for them. And how can you help them to check their work environments and bring them back into operation? And how can you introduce these new working practices, as I mentioned? And how can you bring in technical and procedural charges for them? Either they could do it, or you could come back with readiness. Do it with yourself, done for you, or we will do it for you. Package it into 3 different buckets, go for it. Ideal time, and not everybody. There will always be early adopters. There will always be people who follow, and there will always be people who will be pretty late. There will be enough people who will be following up, and that's the whole market to go for it. So that's, I thought I'd land that before we even go for that. Let's talk reality. Let's talk reality. We have done 1 month into COVID, April 22nd. I think there is a need for 2 months into COVID, because these are the noises that we are getting from the buyers, both government and private sector. Yes. So what that meant is, with the uncertainty that's happening up, they have already put back some focusing just on the core essential services, which is normal, which means there is a reduction in non-essential variable works and a deferral of capital works and asset renewal projects across most contracts. And especially if it's a PFI, it's even worse. So what that meant is, the commercial viability of your contract pre-COVID, post-COVID is very different ballgame altogether, which means the assumptions that you have that underpins your contract on the volume, on variable work that you might be, this is my fixed, this is my plan, this is my reactive, and you name it, all this stuff you already know. But I'm just telling you that it's happening across not just local government, not just central government, not just healthcare, but it also happens in offices. It also happens in retail, manufacturing, you name it. So you're not on your own. I just thought I landed there. But if you are not be aware of this, remember this is happening. So this is a time where you might need to vary the thing, and the economic viability of the current hard services contracts will be very interesting. As you know, the first slide that I touched about, the 4 or 5 new offerings, meant that there might be some positive spin on running the contract, but when the project works and the volume goes down, then the viability of the contract comes down. So what can you do to balance the thing? That's very, very, very critical. So please do have a note before we move into all the positive spin. Just as a quick test on what's happening now as we speak. As you know, there was a historic deployment of remote work, and obviously not everybody is used to working from home. They don't have the infrastructure, and we are not always talking about this glamorous central London tall high-rise buildings. There are people who go back to business parks, big business parks. It's just there. People even work from warehouses and stuff. Either way, some way or the other, that remote working happened. And now that is when Britain is getting ready to go back to work. There is a lot of talks about how the new workplace is going to be structured, who is going to do what, etc. This is what today morning we had a call, and one of our buyer in financial services told, what, it's a journey. It's a 12 to 18 month journey for them. I'm just sharing that. It's a 12 to 18 month journey for them. And what they're planning to do is just to adapt today and slowly move to a permanent setting, right? So if that is the way, which means you are going to hear a lot of noise about how many people can be there on the left, how are we going to measure this 2-meter distance, and how are we going to ensure that there is no soft safe areas, remove everything. And you can clearly see the Canary Wharf, for example, published today the detailed plans of how they're going to bring back the financial district back. You can clearly see it's a step process. But keep that in mind. Keep that in mind. The opportunity that you have is not one-off. It's a journey there. And how can you support them in this journey? Adapt today, and how can you slowly move to the permanent setting with them? Government, banking, and others will do their own part in reviving the economy as we speak. And transport will play a key infrastructure. But who works where? How is the compliance is going to work? How can you support the companies? It's all happening as we speak. But the important thing is, how can you be part of this journey, and how can you go and do that? On top of it, just one note without getting into details, real estate as we speak is permanently changed. It used to be bullish. I even saw the number of 15% growth just around February time, but I'm hearing now the number is 37% down. So it is what it is. These are numbers, reactive numbers is turning up. As I mentioned, there's a 12 to 18 month journey there. And again, position yourself there before we enter into hard FM. Right. I'm just seeding you 2 months into COVID, what's happening, just so that you're aware of this. So number one, what good news is in this COVID crisis, not just NHS, not just critical services, but majority of the people do had access to the assets to keep water, air conditioning, renewable energy, fire, all these things to keep them safe. What that meant is if they do decide, say, schools starting to open 1st of June or offices starting to open 1st of June, majority of the players can tweak it. Yes, there might be some supply chain issues as they have done here. They reorganized it, but most of the people had access to the assets. But if I'm hoping you also have access to the assets and you also managed your assets, not just being a physical present, but um, outside monitoring. But if you haven't, I think it's important to get access to the assets and get ready for this, helping your clients to be ready for the new journey. So many people are now used to the current COVID-19 operating model, or the new regime as you call it. So I already touched the pre-COVID operating model, post-COVID operating model. What is the right operating model? We don't know, but if there is a need, at least have some sort of legal terms in place to make some changes in your contract, because we are hearing not many of the costs that was incurred on COVID-19 was actually reimbursed by buyers. I attached that more into 2 months into COVID. But for now, if you have changed your supply chains, if you have done beyond to help the critical infrastructure work, but if you haven't paid, this is the time to understand, work with your clients to just see, what, this is my volume, this is what we agreed, this is my terms, this is the pre-COVID, this is the post-COVID. What is your operating model? What is my operating model? Do I need to have change in terms to have, right time to do that? This is what we always share as the FM service provider landscape. People that are full on hard FM players, like MCore, like Integral, you name it, pure play players. Then you have the likes of Mighty, ISS, Interserve, and other players who could depend to play hard FM, plus they could do full-fledged FM. Then you have the real estate companies like JLL, CBRE also have their own supply chain to deliver both. So this is what we know, but now the whole market is merging. So the workplace technology is coming up. Workplace optimization is part of FM, which was in the outside segment of what FM is, but now it's very much integral to FM, which means the identity of FM is changing. So what we found in this past 1 month, speaking to 50 plus buyers and suppliers, is very interesting, which means regardless of how you call yourself, I even went and checked how people call themselves. It's still old standard, but this is my quick suggestion. You can be hard FM, but you can be IFM. But if you don't use the word technology now, I don't think you are at the right place. It's some way or the other enabled by technology business is critical, and if you haven't, it's important to position yourself as FM technology business, even though you have CAFM system, and you have reporting tools, you have dynamic reports and also sensors and stuff. It's important, if you haven't termed yourself, important to term yourself as technology companies, because if you don't have this technology word or IT word in your own branding, in your own identity, I think it's not going to be of great successful path going forward. And the move from planned reactive to predictive real-time dynamic Uber-based model is that the noise are coming up, because we need to know based on the real estate, we need to know based on volume, pay-as-you-go model is coming up. And if you haven't structured your delivery model around it, it's important to structure the delivery model. But people who already have done that, people who already co-position them to technology, good news is you are well placed in the market, and you just need to make yourself aware that every single buyer in your chosen sector is aware that you are so and so. So that's the important part. Now, it's going to be challenging to see who's better placed to succeed in this post-bid thing, but you will clearly see who's creating a lot of noise, who's quietly making the journey with their own clients. But this is the time where, as I mentioned, every buyer is looking at options, regardless whether you provide good service or not, bad service, good service, they are looking at options. This is the time to clearly say who you are, what you stand for, why they need to trust you, and all other values and other things. So moving back, real core crux. This was the report that was published early this month, actually. So by one of the research organization, they quietly pulled it back and said because of COVID crisis, they need to revisit the numbers. But either way, the noise is this. We don't do qualitative assessments unless the data proves which is what it is, but you will always see enough research companies coming out with this sort of reports. They do some desktop research, then they call senior leaders in the company, check the numbers, and then they go for it. But when you do bottom-up analysis of all the outsourced contracts, the number is nowhere near all these projections. But either way, this is what, if you search it, this is what you will find. It's close to 585 billion USD. If you want to know the global FM market, out of the numbers, the three main services are predominantly 90% of the market is between building services, cleaning, security, and IFM. We all know that, and then the rest of it is split around this. But even on that domain, you can clearly see IFM followed by hard FM and followed by soft FM. That's how the whole market is structured. But either way, the prediction is pre-COVID, this is where the market is globally. If you are a global company, good news is, regardless of the numbers, hard FM still has a place. And if you're a pure play hard FM, positioning yourself as an integrating services, if you haven't done in the past, we have seen many companies doing it in the past. Again, that's an ideal model, because in that way you have even more addressable spend in the market. So let's move on. And the other one is, if you're not aware that there is a global job task analysis program by IFMA, very proactive these days compared to our local organization IWFM. And Rick's also in particular, please do listen into any of the webinars that you do. So our data points. You might have seen this again, but let me go through that. The detailed report is on the website, but because this forms the basis of the next 30 minutes of specifically for hard FM market. So from our bottom-up analysis, we believe that the market is 85 billion pounds, 85 billion pounds just for UK. And again, this covers only 85% of private sector outsource opportunities and 95% of public sector FM opportunities. What that meant is we have data gaps, and not always we know who runs what, but to a certain extent, pulling up the data, this is what we know. So assume we know the market 80%, this is where it stands. So public and private still is the same. You can clearly see both are reacting very differently now because of COVID. So based on the reactions, the market comes out differently. How public sector is reacting, how private sector is reacting. Funnily enough, in this past 1-2 months, if you attended the previous webinars, you would know close to 600 million worth of COVID opportunities have been outsourced just in 4.5 to 5 weeks between April and March. So now with even more track and trace projects that's hitting the market, public sector is something that you might need to go on mind. But again, these opportunities are not necessarily, or predominantly mostly, are not coming in the tender cycle. If you have relationship with central government, commercial services, local government, they're just coming out as direct awards. So let's move up. So critical point here is hard FM, IFM, let's look at it together, 37% and 18% added, you are looking close to 55% of the market. This is the overall outsource market, and close to 55 billion pounds of opportunities are there, right there. 55 billion pound is a market that you can play for if you do hard FM plus IFM angle. But if you're pure play hard FM, which not many people are looking for, they even look for integrated type of model. I don't want IFM, but can you just consolidate all of the supply chains for us, which is slightly low in value, but more high in margin? That sort of opportunities still there, but they will be part of other support services. So the market is that 55 billion opportunities, IFM stroke hard FM. So moving on. The reason we are doing it by sector, the reason we are doing the services is many companies have structured themselves by sector. Some have structured the services. We thought we will serve both angles so that you could chip in, chip out, depending on how you have structured yourselves. Again, it's a valid point now to just see whether I want to operate in the same domain or I may need to restructure differently, especially if you operate into retail, manufacturing, pharma, and other sectors which has been hospitality, catering, for example. If you have severely hit on those areas, it might be something that you might need to look for. If you're looking at public sector, central government, local government, NHS, you might need to structure yourself differently because it's a high growth market there. Officers, workplace needs to be playing a different role there. So either way, this is the market, and we have covered most of the sectors. We only have two, I think, which is energy and utilities, and transport, I think, which we'll cover next week. But if you haven't listened to previous webinars, please to listen in, so that we touch the dynamics of how those sectors are going in much more detail. So where are we? So how this slide gives you a feel for where are you playing currently, and if you do want to play in a different market, what are the markets that you can play? Again, look for touch points. Look for touch points from your own supply chain. You might think that I might not doing education, I might not doing NHS, I might doing pharma, but your supply chain might be doing some sort of work, even some reactive fit out works here and there. And so there'll always be some touch point. This is a time to consolidate, to understand what are the touch points that I have in my current segments, what are the touch points do I have in my adjacent segments, and bring that learnings together and position yourself. So very quickly, public sector procures at 25% clear slice of how they are doing. So regardless of who you are, what you do, hard FM, IFM still plays a point there. As you can clearly see, it's predominantly close to 50% of the market is hard FM plus IFM in public sector. But other support services does come in, which is parking, enforcement, you name it, document management, other things. The value seems to be slightly higher, but mainly public sector, the way it's structured, is not always correct in the way they categorize the services. But if that's a key market, so how the public sector is structured, look carefully. The deep cleaning framework from central government has been released, and that also has some elements of hard as well, hard FM as well. Just if you're not looking into that, please do have a look and see whether you can be part of it, because Crown Commercial Services will have a major say. Again, the Crown Commercial Services framework on other related building services, construction services is also there. It was outsourced in the past, but many of the marketplace frameworks are available for you to tender at any time. See whether you could still tender if you haven't, but if you have tender, it's worth reaching out to them to just see how can you be of help. As you know, there are many direct awards that's happening, so don't wait for the tenders to land. So defense, as you know, estates came up and other things. So again, you know who are the 4 or 5 key suppliers who have got that. 100% they won't be having self-delivery capability to serve 100% of their contracts. So it's an opportunity for you to reach out to them to just see whether you could help them with any of their supply chain, if you could part of their supply chain, etc. And look proactive, structure yourself in the market, and you know what, it is right there in Square. But we will go deeper sector by sector in the next 15 odd minutes. Private sector is the same. IFM and hard FM, as you can clearly see, between them they cross 66%. What that meant is 2/3 of the market is for you to play here. And soft FM, catering in commercial buildings still there, but that's the market that's been massively hit as we speak. But if you are playing in the market, go deeper. This is the right place. So how the market is structured, we spoke already about that in length in our specific market sector webinars. Offices, commercial building, as you can clearly see, people are opening up their offices and they're having teething issues of how many people are going to come back, the mental health issues of staff working from home, and what are the infrastructure, laptops that they need to procure. All these teething issues have been there, and now they have been sorted. And now who sits where, how are they going to structure the offices? It's there. We touched the offices long time. In 10 days ago, even that webinar, I feel like it's slightly outdated because things have changed. So manufacturing, industrial, we touched it, how the companies are going through as we speak, not just planning for COVID, but also on the impact that they have for Brexit as well, when their overall supply chain is going to be massively hampered. Based on this import-export. It's there right for you. But again, between offices, manufacturing, energy and utilities, which will touch that 70% of your market. And if you are not operating in those three sectors, it's important for you to operate in those three sectors. Then comes a higher education, universities and stuff, which is again, it's an important market, especially now when students are still there. Student accommodation is its own market. But just use this webinars to understand which market you're currently playing. Is it still the same market for me? How am I going to position myself from here? So you already touched that. The numbers have slightly moved, but the important thing is the number of projects that's already been outsourced. Forget about COVID, forget about Brexit. These opportunities are already being outsourced in UK. So some form of the other, these opportunities will be coming back. Yes, some were renewed, most were renewed, and some will be coming as a cluster together. And this is the time for you to go back to your own projects if you haven't renewed it, and renew those projects. But you have bid in the past of certain projects that you come last, final two, or final four, etc. Get that list, go back to those own clients and say, hey, you know what's the status quo on this as we speak? Because we have some solutions, we may be able to help you. Even if you don't have any relationships with any particular clients, if you do have your current clients, find similar clients and go and reach to them. But if you're not doing that, and if you're waiting for tenders, which is very tricky, people who have been relying on OJU trackers and that stuff are now will be having lots of issues, because not all opportunities will be hitting the tracker. Proactive bidding, a new agile sales organization is what we are predicting, which is already happening, where people are making a lot more even without tender process, which is very different. So if you look at the market alone, local government was notorious for delaying all these PPM and other spend, which I put forward in the very early slide. And local government is also notorious for insourcing as well. So, but unfortunately, the number of deals in the market is still high there, and not all local governments have different ways of in-sourced services. Some might be proactive, but keep an eye. But either way, the number of opportunities there are still high. Let's look at the hard FM specific offices. Again, number of opportunities are still high. Yes, there might be less opportunities when it comes to the like leisure, like sports clubs and stuff, because they're closed. But when everybody is trying to come up, that's where the first 4 points are critical, regardless of any sector that's operating in your local area, in your own region. There will be enough people who would need the support on these 4 things. How can you help me to bring people in? How can you help me for future proof? How can you help me to workplace? All the stuff, regardless of sex, is still there. But these tenders, I'm hoping, will be coming out in the same form, but you're not. But if you want a list of these contracts, let us know. So the market sectors, again, by volume of projects is still there. And this is the reason we are touching more and more of these sectors. And we covered most of the sectors except energy and utilities, which we'll touch next week. As you can clearly see, housing is a biggie. Housing is a biggie, especially boiler maintenance, reactive maintenance there on social estates, local councils, and residential buildings is biggie. If you are not playing in the market, please do play on the market. So that's the high level pointers there. And then let's go one sector at a time to just see how people are positioned. First one, let's start from local government. Local government, as you can clearly see, the number of projects varies here, but the good thing about local government always is local government tend to have long procurement cycles. If you have a choice, investing on technology, a long-term return of investment, brilliant, this is the sector to play with. But again, as I mentioned, there is always issues with insourcing, political issues with their local approach, and also devolution, they have their own approach, and social value, 15%, you need to be ready to invest 15% in the social area. But it's a very positive segment on that perspective, as a number of volume of opportunities are there. And hard FM, again, £2.5 million for hard FM contract is also, it's above average. So it's a pretty important place to be. But this is where you receive lots of delays in assets maintenance and stuff. If you already operate in the sector, it's important. But if you haven't, you might need to be prepared to enter the sector with technology, more technology, but this is best place. So 7 years average contract duration, 2.5 million of opportunities. Just a quick scan, found 84 million, 84 opportunities of 1.5 billion. If you look at NHS, for example, the important point here is that moved on from last NHS. Now does not want to return to pre-coronavirus operating model, which means if you are operating in the NHS domain, um, if you haven't changed your contracts and stuff, this is the right time to do that. But if you are a new provider looking to enter this market, you don't need to worry about it because they're looking for new ways of working. And this is the market that's number one market in UK. This is the market for some reason, even though NHS bodies are still procuring themselves, there is a lot of guidance, or there is a lot of um, interest from Crown Commercial Services to ensure that the procurement is done in the structured way rather than every single institution is doing their own way. But a very quick scan just on London alone gives you this feeling, which is like there are 17 contracts in London. Again, 3.5 million pounds, and the average contract duration is 6 years. So if you are not operating, but if you add much more wider contracts in across UK, then that will be even more number of contracts. This is just a sample. So central government, I didn't mention the number of contracts here because central government, it's all about Crown Commercial Service Framework. In addition to that, if you attended a central government webinar, you will know there are many public bodies who have in the past procured themselves, and we do have a list of over 240 central government contracts that was outsourced, but those will be procured through Crown Commercial Services. Maybe one or two lucky ones might be coming without them, but even if it goes out, some way or the other, it will be coming in the form of Crown Commercial Services. So that's why I didn't mention anything there. But if you look, this procurement policy note 220, which is the supplier relief due to COVID-19, expires in June. This kinds of gave people, or the public sector suppliers, some sort of comfort that, you know what, whatever the risk that they are going through, they will be paid as normal. But this expires in June, so there is a push to get KPI waivers and abatements currently in place for an extended period. So again, if you are operating in central government, hard FM player, this is something to keep in mind. And there is a general kind of updates that's going on based on PPN 0220. But if you have not done it, please do, and check how your own KPIs and abatements can be extended beyond it. So let's look quickly on the education college. These are public sector institution. Again, a quick scan just on London specific stuff. So what we found was, again, the average duration is 6 years, and the contracts are again worth 2.5 million, just hard FM alone. This is quite interesting because if you look, local government around the same mark, NHS is around the same mark, education is around the same mark, but all three traditionally swing between insourcing, outsourcing for some reason. So trust, what you stand for, values are very critical. And this is where the living wage and other things kick in. And many of these buyers have to a certain extent delivered in-source contracts well themselves. And they have even got to the status of even getting ISO accreditation and other things. Have their people going through RIC certifications. So what that meant is, they are, it's not like they have insourced for political reasons. They've also took it and they also delivered it, and they're also doing a good job with that. So if you can still play in this market, it's still a good market to play. But always keep in mind that there are some issues with when the school opens, and whether you have access to provide all the power, the any other building maintenance facilities with that, how quickly can you have access to it, and how can you help the colleges and universities which are currently going through their own offline come back when they go live, because that's where some people are not getting enough access to what they are going through. But if you are, this is the right time to get access to it. But if you are not, local schools, local colleges, start from a local area, because this is where localism works. Schools, local councils, 100% works. And also universities, your local universities. Start from there, then you could go up to the bigger, wider national type projects. So energy and utilities, which we'll touch Monday next week in detail. But predominantly, if you look a quick scan of the market, yes, there are many more market, but we just took a sample here. And what you're saying here is this is where the projects are pretty chunky, especially this sector forms under critical services. Under critical services meant this will continue to be one of the key service going forward. How they provide power, energy, infrastructure, telecoms, all the stuff comes here. So what you can look here is the number of value of opportunities are very, 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 very significantly high. So if this is an average from 18 contracts, imagine if there should be definitely be at least 5 or 6 contracts which are big enough on that. But this is the problem when you're entering the private sector. The average value or the contract duration is not great. So you will find that more and more as we are touching here. Same number, 4 years is, you will find manufacturing 4 years, exactly the same. Just a quick scan just on London alone. If you look at the leisure-based opportunities, the sports venues, the museums and stuff, you can clearly see the value of opportunities is not that great in hard FM for them. But then the contract duration is not great. This is the regional based project. If you have if you have a small unit, London based unit, or if you have a small subdivision, then let that be a part for leisure. If you have a massive division just for leisure, I don't think that's a great structure for you to go for it, because this is more or less low volume. Depending on who you are, I'm just assuming that you are a corporate, big corporate, 1 billion plus, 500 million plus companies. So this is where you will find lots of churn-based opportunities. Structure yourself accordingly and position leisure in that way. Office commercial buildings, I touched it briefly. Every office, every big holder, real estate is trying to find their own protocols, how things are going to work. But you cannot get away from office and commercial buildings at various level. As I touched very early on, this sector where people are moving away from central. So when as you clearly see, there is a lockdown. There's in underground, lots of issues there with transport. So many companies are moving from central hotspots into wider regions. So if you have regional structure, this is where it's going to work wonders, where if you have regional presence. But most providers who are doing national presence, I suggest you create regional structures to cater the needs of these suppliers. A, it helps you with public sector. B, it also helps you when these commercial office buildings are moving people towards the local chains where there are much more reduction of infections and stuff. So keep an eye on that. But either way, there are at least 140 contracts that's been outsourced. Just a sample here, there are close to 380 contracts. But again, the value of the number of opportunities are high, but the contract duration for private sector tend to be between 3 to 5 years. It's unfortunate, but it is what it is. But now the 4 criteria, as I mentioned very early on, meant that this could be slightly longer. Manufacturing, again, you can see the same number 4. They are going through some massive changes themselves and how they are doing. They even launched a virtual shift. Automakers, pharma, they all have the virtual shifts where the supervisors are working virtually, and they are testing out their efficiency, productivity levels around it. So, but unfortunately, they would expect you to do virtual shifts if you're operating in this terminology. If you're operating in this industry, how can you provide this virtual remote monitoring? If you haven't, if you do provide, it's a great time to enter manufacturing industrial, because the very first time that industry is moving to virtual working, virtual shifts, at least at the supervisory managerial levels, whereas only people, critical workers are there, right there working. So a quick sample here. Again, the value of opportunities is at the same level as what it was, like office and commercial buildings, but the duration is very sticky. Again, for some reason, manufacturing industrial does not stick with the same provider continuously. This is one sector where you could displace any incumbent for some reason. Maybe they procure on a cost basis, but for some reason, it is just not sticky for any providers. So it is a challenge if you are operating in this sector to be sticky as well. So residential housing, we already touched. Number of contracts is slightly high here because of the housing contracts. And this is also meant that the energy comes biggie here. The residential and housing meant that the volume of opportunities are high. This is just a sample, 85 contracts here just in London and adjacent areas. But if you look beyond, it's close to 5 million worth of opportunities, each with a duration of 5, because it's a blend between a local government and private sector residential buildings. So retail is pretty interesting. Again, the average duration of the contracts is still around the same mark as private sector, but the average value of the projects is slightly high. But again, going further, the retail portfolio is going for a massive transformation, as you can imagine, where many providers who shift online they are starting to get more out of it. You could see even the biggies like Waitrose, Marks and Spencers are now thinking about reducing their property portfolio for a while. Then you can also see clothing retailers reducing. Then the food retailers have done really well. And for people who are in that sector, there's much more opportunities there in that sector. And if you hadn't, it's quite a small sector where only very few players play, but very large contracts, but it's much more technology driven. That's something you can at least enter through supply chain. But if you are entering retail, again, it's one of the sectors that's going to go for a massive transformation. But digitally, it's also a good place to be part of the transformation as well. So big sector, especially with the numbers, food retails. So I just thought I'll quickly go through a few last pointers before we close the call and open for questions. So there are lots of things happening which is beyond our control now. So many companies are adapting, but the adaptation is what's going to make them succeed in this market, because companies who have been tactical without strategy, who have been bidding for whatever opportunities that was hitting them, are unfortunately will be left behind. Companies who are now looking at new ways of working, telling people that they are doing new ways of working, sharing their practices, going beyond what they're doing, are the companies who are going to go for, because the market have been waiting for this for a long time, especially Brexit, OJU regulations and stuff. If public sector is outsourcing millions in direct awards, imagine how private sector will be doing it. So this is the right time for you to create that environment for you to help the organization approach this reopening of workspaces, regardless whether public or private. So the projects work, the opportunities, yes, it's went down, but now it's a question of some have made much more in this 1.5 months than the whole year. That's because they were at the right place at the right time. What it meant is if that trend continues, uh, it's not good for the economy, not for the transparency of it is, but it is what it is. So, and the next one is some of the opportunities that went up now. You might have seen that there's 18,000 people track, test, and trace kind of individuals that's been outsourced to few people. Just like that, multi-million-pound contract that will go region by region. That will be going. So again, how can they be part of the supply chain? Managing that supply chain. If that's being done by central government, that will also be done by locally by NHS and local government as well. These are new projects. These are new service offerings that you might need to have in place. Again, coming back, you are an FM service provider, but you have also done tons of contract mobilization, tons of project planning, tons of project management. This is a time where many of your buyers require that sort of project management support, project consultancy support. Don't just, my pure suggestion is don't just position yourself as hard FM player. How can you position yourself as this mobilization stroke project management support planning with the buyers, so that you could help them to reopen their offices to come out in the way that they wanted to. That's an opportunity. That meant that your margin might be slightly high, but you are there right with them as a partner, not just coming out with a structure that says these are our guidance for you to open the offices, PPM, and then fire and safety, etc. Think beyond that. Again, I'm sure you're already doing that with remote monitoring, intelligence gathering, communications of data, workplace sensors, and now the recent consumer workspace apps, health, wellness, health-oriented working. If you are not, build that ecosystem. And because whatever you are selling might not be what the customer wants, but whatever you have in the supply chain and adding it as a package might be making a much more compelling offer to a supplier. That meant they can just work with you. So what are the noises that we are hearing from our buyers immediately? Yes, there is a need for on-demand pay-as-you-go type of model. If you haven't build up this commercial model, the reactive maintenance, planned maintenance moves into predictive maintenance. Now it's even more. It's demand maintenance. So most of you might have already got this, but if you are not, at least create this. You know what? You don't need to pay us at different volumes, but here we go, on-demand pay-as-you-go model. Next one, energy efficiency, how we can do that. It's always there. Again, it's still going to come up in data centers, life cycle. It's now becoming biggie. If you haven't got any presence there, try to build a presence on data center type of projects because of technical infrastructure. Virtual working meant that is beyond capacity at the moment. I've already touched telecoms, digital infrastructure. Again, the flexibility that comes with point number one also comes in here. How quickly can you remove the fit outs? How quickly can you do the modifications for us? How quickly can you work, keep on doing that? Because they make the changes, things work, suddenly there is another symptom, you need to remove everything, keep it back, put it back, keep it back. That sort of flexibility meant what sort of solutions can you have in place? Some providers have already have fast tracked their services around it, and they're helping people on doing those services. But if you have not, that's the right thing. I'm not going to go much detail on remote monitoring and space management and moves and changes, because you might not be doing that, but this is the time for you to position much more wider, not just a hard FM player, but also to enter that. Projects is now called projects as workspace. If you're not workplace, there's design consultancy, there is surveying consultancy. Work with them, build that ecosystem as I mentioned, and come out with this collective stuff that's going to build future-proof infrastructure in the new world. We already touched, outside that, as I mentioned, very basics. There are opportunities that's been outsourced. There are at least 340 opportunities in the sectors, both public and private. Maybe even if you put 1 million as an average value, we're looking at £3.5 billion of opportunities that will be coming to the market in the next 12 to 18 months. But with the direct awards, I'm slightly concerned that it might not come in the same format, or it might be outsourced. It might be given to somebody already. I'm hoping at least 50% of them does turn up in the same form. But at least having awareness of what these are and reaching out to them is going to be helpful. So insourcing integrator, it's always going to be a model that will continue to be popular in chosen segments where somebody will be insourcing, but you don't need to provide the service, but at least integrate, work with the supply chains and do that. So a test view, but what we don't know at this stage is this reactional opportunities, that integration between how people react to property and the property reacts to the specific buyers. That one we don't know. People might have a real estate strategy, people might have a people strategy, people might have their own, what we call, bringing all together the workplace strategy. But these are strategies, right? They need to test it out, but with that comes opportunities. It's going to be interesting, but having that flexible new value propositions and understanding things will change in the shortest time, like what we faced in the past 4 to 5 weeks, meant this long-term contracts versus short-term contracts, short-term support. How are you structured yourself around this short-term structure to help these companies? It's going to be pretty critical. And this is what is a real biggie for us, especially even we weren't thinking. The weekly sales calls for many companies have moved to daily sales calls, and which is shocking considering the buyers are not now accessible because they're doing their own thing. What that meant is the companies that we are advising, the company we're working with, and the market is gradually moving to different works of how they prioritize their accounts, their deals, where they could quickly invest, and what their clear growth plan is. It's being done in real time, and what they have 1 month ago is invalid, and what they'll have 3 months down the line, they don't know. So it's about having, like, this is my pipeline, how much of that is real, and where am I going to prioritize my accounts based on what I currently have, where am I going to go for that. That agile sales organization is something you might need to consider setting it up. If you haven't, set it up. The final point is, there will be disruption to current and future bids, as you already pointed out. I'm not going to reread it, considering we only have a few minutes to go for. This is an ideal time for you to review and stress test your growth plans. Just understand where your growth has come so far and where do you believe the growth is going to come from. Decide who you already know your current customers. Decide who your customers are going to be in the chosen sectors. Then position your brand accordingly. It's not about just providing articles. It's not about providing some, thank you notes, thank you heroes extra. Genuinely, what is your brand positioning? where your pipeline sits, where does your account development approach sits. This is a time where you give much more importance to account development than the pipeline development, because who you have currently got, retaining them, growing with them will be much more solid than actually coming in the market to go for it. If you're coming in the market, you should structure your team into reactional opportunities, which is like creating new opportunities, and then what's available in the market. Finally, restructure your team into agile sales organization if you want to. We'll continue to update the resource as we go for three new articles on the tech will be going live over the weekend. And if you want to stress test your strategic planning for your company, let me know, and we're more than happy to come over, spend some time with you to understand, to do that yourself. If you need some independent overview, want to boost the pipeline, let us know, review stress test to boost it so that okay, I have enough. So the point here, final point is, you're already seeing some winners and losers, because the strong is going to get stronger because of who they are, what they do. Because some opportunities will always be given to them because of their size and because of the risk that involved. But there is also opportunities that's happening on the regional domain. There is also opportunity between £500,000 all the way to £3 million, which is now much more wider. And you can clearly see not many people are now ready to take up that market. Before, they were always doing reactive tenders, by doing 10 tenders a month, 20 tenders a month, just churning out. But that market is now gone. This is about relationships. Who you know? Do you know the market? Do you know your customer? Do you know the trends that's happening on a reactive basis? We will every month, we will try to put at least 2 to 3 webinars on either services or sectors, so that you have this ongoing intelligence to go and do what you're doing. But I'm pleading you, this is the time to reposition yourself to serve the community, serve the economy, serve everybody around you. And that's it. So the next webinar is going to be around arts and stuff, leisure, which is small value, but it is what it is. Let's just touch that, and transport energy, followed by catering services. Then we switch off. Then we have a few plans which I'll share. We might do a 2-month COVID webinar end of month, and we might help you with how to build the pipeline yourself, and also maybe run a challenge just to keep things moving so that you're not on your own. So that's it from me. If you have any questions, let me know, or otherwise drop me a line.